The following is a presentation of TFNN. With Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 20th. Is it the 20th? Yeah, it's the September 20th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, and in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 265 points, 26,671 is the print. S&P's up 24, NASDAQ 100 up 84. It's green across the board. Percentage-wise, the leader is the semiconductor index. That's up 1.4%, 19 points to the upside. Gold's up $2, silver's up 2 pennies. Light sweet crude back a quarter, leading the charge dollar-wise. The upside is Booking Holdings up $21. Alphabet or Google up 18. GW Pharma, that's moving higher. So that's moving higher where Tilray is moving lower. GW Pharma is up 9, nearly 10% or $14 and change. Eventbrite, I think that is a new IPO. So we won't talk about that. Not that we can't talk about it. Just no reason for me to mention the numbers. Thor Industries is down $14. Northrop Grumman down 13. Chipotle up 10. Red Hat down 10. So we certainly have things to look at to the upside, to the downside. The first question that came in, it was, I think it was fairly late last night, and I believe it was from a Josh S. If I got the, it was, I can't. I'm not near the computer where my emails come in. I get them on my phone here, but I keep them off my trading system altogether. I'll email, just simply keep this thing just doing what it's supposed to do out there. But Josh was asking about the emerging markets because, you know, every time you turn on the boob tube somewhere, they're talking to you. They're trying to convince you to buy into the emerging markets. Are they right? Are they wrong? Josh's question was, and it's always more difficult, was basically, hey, do you think the short is over for the next week or so? And I don't think he put or so. I'm putting you or so in there. You know, and that always makes it challenging to, and what I did for Josh was I gave him the bigger picture, what I believe was the bigger picture out here. So let's go take a look at it. Let's see what we can do, because maybe you're asking that same question. Hey, should I go invest in emerging markets out here? No. As you and I know, that the most important thing, there's many important things, but one of the most important things is to understand how your instrument is performing around the globe. What are traders around the globe taking a look at? So here, because Josh was, I hope it's Josh, was looking for more of an intermediate term time frame. We've got just the weekly time frame charts up here. Now, you've got the EEM, so I'm using that because that was specifically what he was asking about. Next to it, you can see how the emerging market ETF is trading in euros, then in yen, and then in pounds out here. So that's the first thing. I happen to have all the profiles turned on here. So what we can see is that this week it appears that the emerging markets is getting back inside its weekly profile, the bottom of which is 42.70. You're trading at 42.92. Now, I don't know where the close is going to be tomorrow, but come tomorrow's close, it's possible that if you see a close inside there, then price would head up to the 43.49 or 44.67. Now, this is information I didn't provide to Josh because I just gave him kind of the general parameters of what Stevie sees out there for the longer haul. If we step out of the EEM, not step out of it, but take a look at our next chart out here, which I think is really important. In this case here, it is the direct correlation between its direction and the direction of the U.S. dollar index. So the top panel is the EEM. The next panel is the U.S. dollar index. The bottom panel shows us our correlation efficient, so to speak. Now, I have that set at a 10-day, so we're looking at a 10-day average here. When the bars are below zero, what that tells us is there is an inverse correlation. So because we showed the U.S. dollar index as it is, trading right now at about 93.58, you can see that, yeah, there's an index correlation. So in order for the EEM, Josh or anybody else out there, and this is a daily time frame that we're looking at right now, in order for it to continue moving higher, it basically is going to need the U.S. dollar index to move lower out there. So is the U.S. dollar index going to continue to move lower? That's really the question that Josh or you or anyone has to answer. If we take a look at the U.S. dollar index, where did I put that little puppy? Okay, here. If we take a look at the U.S. dollar index, here's the level that I want you to pay attention to and focus on, which happens to be right now the weekly TAS market profile. The bottom of its box is 93.38. The actual low that we've seen today thus far is 93.40. Man, that's pretty darn close out here. So what you and I know is that the U.S. dollar index has hit a key level of support. What happens if that support breaks? Well, we can then take a look at a Gartley buy pattern that would likely set up. What do I mean by that? Well, an A to B equals CD pattern. So if the weekly bottom of the box gets broken, at this stage here, what you know and what I know is support is held. And that's pretty important. In order for the U.S. dollar index to continue to trade lower, it is going to need to bust through support. If we just simply disregard what's going on with the yen, the pound, try to put all 5 currencies that make up the U.S. dollar basket, then we just focus on just simply the December contract for the U.S. dollar index. So if it breaks through that level of support, then we have price targets to the downside, 92.76, 92.07, 91.20, any of those. Even 90.24 would be a Gartley buy pattern. What's it going to require in order to get that Gartley buy pattern? Well, first, you got to close below support on the weekly. Second, as prices moving lower, because it would presumably do that if you see a break of support, then we'd be looking for some type of bullish reversal signal. But right now, with regard to trying to play emerging markets to the upside, I say you've got to be careful, because of that direct correlation with regard to the U.S. dollar index. The reality is, especially when you take a look at this, you know how H.M. Gartley, via Larry Pesavento, let's say, has taught us time and time again, when you've missed out on a major bull run, such as the U.S. dollar from March to the August time frame, you want to buy that first A to B equals CD to the downside. And then, when that happens, emerging markets are going to get trashed and thrashed. Get them out of your long-term retirement accounts. Now, Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So the decision that every trader investor has to make is, do you want to invest in something like this? Again, this is the emerging market ETF, EEM, where you can see on a weekly basis steady decline out here. You now also know about the U.S. dollar. Even if it breaks through support, it's likely going to form a Gartley buy pattern, which is extremely bullish when that occurs out there. And we know the correlation between it and the U.S. dollar index. You want to invest in something like this, or your other option is, do you want to invest in something like this? Something like this being even the Dow. That's right. We're at new all-time highs. We're taking out, now I don't know where the close is going to be at the end of the trading session, but if it closes above the January 26 high, then you remember that conclusion or that pattern, really the pattern that I identified and I shared with you guys last week. Subscribers was on September the 4th, as soon as we came back from Labor Day, that said the lows in April inside the Dow were a major bottom underscore major. And what we can see here is there's a breakout party in the Dow in all major currencies. What you want, what you absolutely want, is you want to be in those instruments where traders around the globe are seeing things break out. Well, they broke out. The Dow broke above its all-time highs in euros months ago, in pounds months ago. All the Brexit, Schmexit stuff going on over in Europe, really? So you want to go park your money over there, or you want to go try emerging markets when you can do this right here? It doesn't make any sense. Doesn't make any sense to Stevie. If we take a look at where's the Dow headed to next, here's the Dow, by the way, the equity futures contracts. All you'll see are green bars out here, meaning price is above resistance, so there's no resistance in place right now for the Dow. Closest level of resistance price-wise would be about 26,169. That's the top of the daily box. And once that formed, price broke above it in one single day. That tells you about the global flow of equity out there. With regard to where is it the Dow is headed to, well, if we take a look at the horizontal trading range boundary lines, as long as price stays about 26,616.71, the old all-time high, January, the price is next headed to 27,668. It's next horizontal trading range boundary line. Is that where price is going to stop? Not at all. Longer term. We're just giving you the longer term picture out here. Where's price headed to longer term? Well, first, for those of you that believe in the A to B equals CD pattern, all you have to do is take a look at this chart, which is the Dow in the upper left, the S&P in the upper right, the NASDAQ in the lower left, and the Russell 2000 in the lower right. A to B equals CD patterns are underway. They're confirmed. What more do you need? Where's the Dow headed to? Look, 27,251 is the one-to-one A to B equals CD. If you want to stand on the railroad track and get in front of that and sell that level, well, good luck to you. That is not where price is going to stop. The lightning bolt pattern, the pattern that H.M. Gartley introduced to you and I in 1935, although we didn't actually get it until we were born and then many years later, until it was introduced to us. For me, it was introduced by Larry Pesci. Well, it's either Tom or Larry, but Larry, I'm going to give Larry the credit for that one. And so look, this is the 1 to 1.272 is 34.83. We already know the 30,400 level. We've been calling for that to be a target for a long time inside of the Dow because of the broken consolidation pattern. But look, prices get ahead beyond that. Longer term, 35, 39,000. I think this is going to be one of those 1 to 2 A to B equals CD patterns to the upside. Yeah. 1 to 2, A to B equals CD before the Dow finally, maybe makes its high there. So things look awfully rosy or Rhodesy, however it is you decide to look at it. NASDAQ 100, that's already hit the 1-to-1 level. Its next level is the 8,600. Remember how foolish it sounded? We said, hey, the NDX 100 is going to be targeting the 8,800 level out here. Doesn't look too foolish now, does it? The S&P hasn't even gotten to the 1-to-1 level of its A to B equals CD to the upside. That's 32.78 to 36.77. This is the gravy train out here. Why would anybody spend time looking at the emerging markets out there? Because you want to buy a good bottom? If that's the case, and by the way, the Russell 2000 on its way to 1896. If that's the case, please make sure that the dollar is just going to get trashed. I seriously doubt that's the case. It's going to make one of those Gartley buy patterns if it can get through the support level that we took a look at on its weekly time frame out there. Some folks inside the Tiger's Den wanted to take a look at what the daily profiles were. The S&P 500 just crushed it today. The top of its box was 29.14. It's above its all-time high at 29.21. It's really perhaps what's going to really fuel this market. And I know you're saying, what do you mean? Really fuel this market, Steve-O? It's been the Russell 2000 that's been a little bit of the laggard out here. It's trying to get back inside its box, its TAS market profile. That's at 1725 out there. Maybe the baton's going to be passed to the Russell 2000 if, in fact, that's going to take place out here. But that's the level to be watching, 1725. If you get above that, we'll call it 1726, and 1734 is in the cards, and 1743, and then back to its new all-time high out there. If we take a look at the NQ, it looks like it wants to go target its previous all-time high. That's from back on the trading day of September the 4th out there. Things look very, very bullish. When they change, I'll let you know. But longer term, the longer term picture with today's move, that's all that we needed to confirm that pattern, which you and I have looked at. It's the same type of pattern that confirmed the 87 lows out there. Yeah, the 1987 crash lows out there. And we're just getting started. So I know that you're going to hear other stuff on the tube out there and from others. But just do the work yourself. Do the kind of work that I've done out there. And just, go subscribe to the newsletter. You can see that work and have access to it anytime. This is the bigger picture. Speaking of the bigger picture, today's also another interesting day. Why is it interesting, Steve-O? You know, yesterday you and I took a look at the 30-year Treasury bond. One of the things that we were looking at was some of the short-term signals with Stevie's black box indicator tool out here. And what we were saying was, hey, be careful out here. It looks like the 30-year Treasury is trying to form a bottom. Now, I don't know what today's candle is going to be, but it is the second test, and at this stage here, rejection of the swing point that formed on May the 18th. It's possible that what you're going to see take place today is the formation of a hammer candle. I don't know whether we will or we won't. We don't have that right now. Did we have one earlier? Yes. Does it matter what we had? No. It only matters what we have at the end of the trading session out here. But should we get that hammer candle, it's a pretty good indication that bonds are ready to move higher. That's the first indication. The second indication that bonds are ready to move higher comes from taking a look at the where is it? Taking a look at the 30-year interest rate chart. And really, the person who turned me onto this was John, or Mr. Z, inside of the Tiger's Den. And he asked me a question, or we were reviewing or discussing the 30-year rates out here. And lo and behold, he's dead right. I don't mean dead. He's alive right. And that 3.255% is really significant resistance. We'll talk about that when we get back from this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has just launched a Tiger Dollar sale for one weekend only. Through Tuesday, September 18th, you can get up to a 50% bonus on your Tiger Dollar purchase. Tiger Dollars never expire and can be used for any TFNN newsletter or service. TFNN has a new website launching in the coming weeks, and to celebrate, we're having a Tiger Dollar sale. For all the details and to get up to a 50% bonus on your Tiger Dollar purchase today, visit the front page of TFNN.com before this sale ends Tuesday.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
folks. Now, the cool thing about this chart here, and we're taking a look at the 30-year T-bond interest rate, which is the most important thing if you're trying to trade TLT or TBT out there. And so what I did was I changed it to a weekly time frame, just because it was the first one we were looking at was a monthly time frame. Now, the red horizontal lines are on the screen. These are the monthly horizontal trading range boundary lines. So kind of cool. I can have multiple time frame signals on this chart at the same time. But the reason why I wanted to change it to the weekly time frame is just so that you could clearly see where the cavalry is, where the buyers and sellers are. And right now we're looking at sellers. So as an example, when the 30-year Treasury back in January of 2015 made a move off of the low out here, the high that was formed on a weekly basis on June 29th, that was a week that was engulfed 2 weeks later, so created a nice big bearish engulfing candle. That bearish engulfing candle from the week of July 13th engulfed the prior week, which was July 6th, engulfed the week before that, which was July 29th. And that says the high of the candles that were engulfed become resistance. Now, that level, in essence, by the way, that high was at 3.245. That level was tested and rejected the week of May 14, 2018, 3.247. You'll see that I've adjusted that level now to 3.247 to just pick up where the most recent bearish reversal candle formed. That was the old bear sash candle from May the 21st. Bear sash, bearish engulfing, basically about the same thing with regard to a futures contract out here. Now, what we saw that took place today earlier was 3.248. We know, you know, without equivocation, with certainty. Look, the one thing that you and I cannot have in this marketplace is certainty. However, I'm saying with certainty, we know where the sellers are, whoever it is that they are, or truly switched around with regard to the 30-year, we know where the buyers are. I don't know who's putting their thumb, who's squashing, who's maintaining, who's keeping the interest rate at this level. It doesn't matter. We don't need to know who. We just need to know that they exist, and they cannot hide. They cannot hide. So if you are in the TLT or TBT, you've got to be paying attention right now, because what it is that you know as of today, as of 1:32 in the afternoon, is resistance is held. It was tested and it was rejected. It is as simple as that. If you're in the TBT, okay, so be it, but be careful. I'm not suggesting that you get into TLT just yet. What you can do is you can watch this 3.247 level. So I'm not really suggesting to you which side of the trade that you ought to take. However, sometimes taking profits on the trade would not be a bad thing to do if you were in the TBT, knowing where you're at here. I know you might have been licking your chops earlier when you saw the 30-year go up and test that 3.248 level out here. But now that you see this, now that you know that it's significant resistance, might be something to think about out here. Do we have any signals, any other signals on a shorter term basis that can guide us, right? Isn't that the question? What's going on the shorter term? And to do that, what we can do is we can go take a look at the different market profiles. In this case here, I'm looking at the 30-year, the December contract, and we've got a 60-minute, a 5-hour, the daily, and the weekly. Quite frankly, the daily and the weekly, other than the formation of a potential bullish reversal candle today, they're not really doing a whole lot for us. But so what we can do is, well, what the heck? Steve, you can go put a 15-minute. You want me to do that? 15-minute, 30-minute, 60-minute. Then what do we want? We want the, I do like that 5-hour time frame, though. We're going to put that 5-hour time frame out here. What do we know about a 15-minute time frame chart right now with regard to the 30-year Treasury? Well, one of the things that we can see is that price has not close below the bottom of a 30-minute profile. Right now is a time frame where if that's going to happen, it's going to happen, meaning maybe for the next hour or two, because we can see that price was moving higher into about 12:30. Then we take a look at 30 or 15-minute bonds that we're taking a look at. They come back. There's a brand new market profile that forms. The bottom of the box happened to be the prior profile's top of the box, so we know where support is at. We just simply know where support is at out here. That's at 140 and 12/30 seconds out there. That's what you'd be looking for. If you see price close above 140 and 17/30 seconds out there, says the resumption higher would be underway inside of the 30-year. Again, it's just a 15-minute time frame chart. I don't know if you want to change your daily outlook based on a 15-minute pattern. If I look at what's going on a 30-minute pattern, I don't see anything significantly different there. If I look at a 60-minute pattern, the old resistance level, the top of its box, is right now support out here. And if price does continue to move higher, I would say the real key area, the go, no-go zone out there, is going to be the top of that 5-hour time frame chart. And that's at 140.29. Now, why would Stevie say it's going to be the 5-hour chart out there? I don't know. I just did. And I can't really show you why, because I don't have it on my screen. It doesn't matter. That's what I would be watching, about 140.29 on any bounce higher. Look, maybe there's no turn today, and maybe it's tomorrow. The most important thing for you to do if you are trading these bonds out here, if you're trading those ETFs, is make sure that you pay attention to the interest rate right around between 3.247 and 3.255. The 5.5, by the way, that comes in at the highs from June 22nd out there. And from a monthly standpoint, that was the candle, or the month of June, I should say, was engulfed by the action inside the month of July. So those are your resistance levels. You close above that, long-term rates are headed to 363. But right now, price is really up against a level of significant resistance. I know you don't want to hear it anymore. That's enough. No more, Steve-O, with regard to that. Okay, so now let's go take a look and see if there's any requests out here. I've got one that's literally in Chinese or Japanese. How does that happen? Of course, it says spam, so it's most certainly spam. I don't read that. So no questions out there. No questions out there. No questions in the den. Nothing. Nada. Zip. Oh, so what do we want to go take a look at? What do we want to go take a look at? What do we want to take a look at that would be important to you? What could that possibly be out here? Somebody might ask, hey, how's the S&P 500 doing? Did anybody ask that? Let me see here. Do I have that? Do I have that? I don't know. I got it somewhere. Somebody might ask a question, hey, what's going on with gold? Gold's got some problems. If we take a look at gold here, again, what we're looking at is we take a look at gold priced in all the major currencies, U.S. dollar, yen, euro, and pound. And so you know exactly who the buyers are today. They're the guys that are in U.S. dollars, and the guys or gals that are trading gold in yen. We can see that, in essence, it's kind of moved higher. Now, we have the market profiles out here for gold price in U.S. dollars, 12, 14, 50. Price hasn't been able to take out that level of resistance. That would be a key level. But even if it does take out that resistance, you've got to wonder, hey, look at those guys, gals that are trading gold in euros. They are what we will call definitely not buyers. They are definitely sellers. So every contract you buy, they're happy to sell it to you. Why? Because in their currency, it's moving lower. The same thing with everybody over in the UK. They're not having an adult beverage right now. They're selling treasure. They're selling gold. It's a problem. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Back to bonds, because it's we're taking a look at instruments priced in worldwide currencies out there, which is the most fundamental thing that you and I have to do. We just have to do it to understand where the cash is flowing and where it's not flowing, answer questions that you and I have that are on our mind. So bonds priced in U.S. dollars, we know that they've been testing resistance. They're not out of the woods. And they're definitely not out of the woods as we take a look at what traders of U.S. Treasuries are doing in euros. It's made a new, fresh low today. Not like an all-time low or anything like that. But whereas we saw Treasury bonds and U.S. dollars bounce off of that support level as a result of the interest rate that we were looking at, we haven't seen that same thing take place in terms of euros. And we most certainly have not seen that same thing take place with regard to U.S. Treasuries, U.S. Treasuries in pound sterling out here. So you know where the sellers are at, both in gold and in Treasury bonds out there. It's not what we saw when we took a look at the U.S. stock market, by the way, just so we're clear on that. And this is really an issue. I know I heard Larry earlier this morning is just kind of posing the question. I didn't really totally hear everything, but I posted some things inside the den. And the question was, and it's the most logical question that that one could ask: why would anybody buy debt over in Europe when the interest rates, he was showing some interest rates, I don't know exactly where in Europe he was looking at, but it was showing that interest rates here in the U.S. were much better than the same bond. I think he was looking at 10-year bonds perhaps, and 10 or 12, I don't recall exactly, or notes or bond. But in any event, the question was, hey, if you're over there in Europe or maybe in the U.K. or wherever it is, why not buy U.S. Treasuries? Why would you buy your local Treasuries? Folks, back in 1985, the Japanese were asking themselves the exact same question. The exact same question. They were saying to themselves, you know what we ought to do? We ought to go buy U.S. Treasuries out there. And from 1985 to 1987, they increased their U.S. debt holdings by 27%. Now, 27% may not sound like a lot. It was a ton of money. And they got their tuchus handed to them. I mean, totally handed to them. And the reason why you want to consider staying in your local currency is because of the return of your money and when you do get it back. And 2 years later, by 1987, the yen had just simply gotten so strong, like by 40%. It so outpaced what took place in U.S. Treasuries. Forget about the interest rate. They just simply got shellacked out there. So it really does matter with regard to what's going on and what's going on in the local currency out there. And that's why people would pay less in rates, so they don't have to deal with the currency conversion when all is said and done. Let's go out to Sarasota and speak with Ray. Ray, thanks for calling. Thanks for holding. How are you?
Hi, Steve. Are you there?
Hello. Yeah, hello.
Hello. Hey, I've got a question on the VXX, the VIX.
Yep.
And I short the VXX, and I've been doing that for some time. And I'd like to get your perspective on where you see the VXX going. Obviously, I want it to go down.
So, and is this trading off of the a couple of futures contracts? Do you know what's inside the VXX?
I do, but
okay.
I just short the ETN or the ETF, and it's been working for I get. Years.
Yeah, I got that. I was just curious because I don't know. It's not a vehicle that I trade or anything. I don't know what the underlying instrument is in there, and so you're asking me the question of what is it doing? You know, if it may be the October and November contracts that are inside that. Which might change our view, your view, my view on it. Because if your question is, where is the spot volatility index headed to? I could be looking at that, and it just simply would be providing you with bad information.
I think it's tied in with the S&P 500. It's a short-term futures ETN.
Right. Well, I know, but it's
the way it's listed is the way it pops up on my screen. It's due the ETN due January 30th, 2019.
Right. No. Well, let me ask you this: what time frame horizon do you use for trading this? Is this a buy and hold from a short standpoint for a long duration, or tell me what you've kind of been doing from a trading standpoint on this?
Typically, when the market gets hit, like if we go down a couple hundred points, 300 points, such as like 6 months ago, the VXX hit a low of $25.59, and then for every 10% that it went, and I was sitting on a healthy position that I had shorted at higher prices, but as it pulls down, I close out some of my shorts. But then as it moves back up, I re-enter more shorts, and I just sort of rotate them out.
So have you been taking profits then in this most recent move down, or where are you at in that position?
I'm still on about maybe 2,000 shares short, but my cost basis is somewhere around $37 or $38.
Sure.
And it's trading at 26.63 right now.
So the real question becomes, what I would be, I guess, trying to figure out how to provide you with the best information. Right now, specifically with regard to the VXX, I mean, you're sort of targeting the January 2018 area in the 25-ish range, 2580, 2550 type level, but it's probably much more complicated than that. And
this is a vehicle that came into the marketplace, I think back in 2009, and it first started trading at $100 a share, and then it's kind of it erodes in value similar to an option.
Yeah, no, I'm certainly familiar with that, and look, they do reverse splits on this all the time, and if you take what the reverse splits have been, and you go back, this thing would have been, as far as a share, priced at $122,880, and so we know that that's not the case out there. I just don't have a clear cut way to be able to assist you in trading this. I'm suspecting that it's really what's inside there is the underlying instruments are the futures contracts, and then we really have to be spending time there trying to find some type of pattern. So this is one of those times where I would love to provide you with some great information. I just don't have the skill set and the tools right now to figure out how to do that. I know that doesn't.
I'm hoping that the market retraces soon. I'd love to see a spike down, and because every time it goes down, it recovers, and every time it goes down, it's an opportunity to short more shares.
Sure. And so specifically with regard to the ES Mini, then, that's a question that I can kind of help you with a bit. But I see we're going to go to a break. I'll tell you what I do because it's the last 2 minutes. I'll take a look at the ES Mini for you to close out the show. All right, my friend?
Right.
Thanks, Ray. That was Ray in Sarasota. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So just to try to wrap things up here. So Ray, who is trading the VXX product, is asking, in essence, will we find the S&P 500 pulling back? That's what he would be looking for. And what we can see when we take a look at the ES Mini on a daily time frame right now, we can see the price is moving higher, doing less relative energy. That's the black diagonal line going up on my screen out here. And as long as that pattern is present, it's kind of like you live in Florida, Ray, Sarasota, so you know this pattern. You turn on the news, you listen to the Weather weather report, and they say to take an umbrella because it's likely going to rain. Of course, we know that. We live here. We don't even need a weatherman. In this case here, it's going to potentially rain is more serious than your normal, hey, it might rain today kind of a deal. The thing is that the rain in Spain, or on Stevie's chart, doesn't take place until we see some type of bearish reversal candle. We could get that tomorrow. If we do get that tomorrow, then yeah, it says there could be a pullback. Where would the pullback take you to? Well, assuming that it closed below 29.20, you'd be looking at 28.96, 28.80, and 28.70 inside the ES Mini to be your target places. Then go ahead and jump back in on the VXX train out there. That's what it looks like to me. If there's new information that's provided to us tomorrow, we can look at it then. Last question coming in from Earl again is looking at FBC. We took a look at that yesterday. His question is it too early to get in? Is this a V bottom out here? Well, one thing we know with regard to Flagstar Bancorp is right now today, the first level that you were looking for to prove itself to you has been attained, and that was 32.14. We're trading right now at 32.41. No real volume behind this move. 96,000 shares versus when it was coming down. Well, I guess it's really not too bad. It hasn't really formed the V for victory just yet. Could be the W, of the pattern. What this has done, though, Earl, it is above support. If it stays above 32.14, here's what should happen, likely to happen, is you will see this move up to Stevie's red line. And that's going to be 33.33 on a weekly basis. Whether that becomes resistance or not, I don't know. But that's where price would move to. Folks, thanks so much for being here. Stay tuned, your favorite polar bear. David White's up next. I'll be back with you on Fantastic Friday. Have a terrific Thursday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.